So we'll begin with our today's webinar. See, the topic is year-end compliances in income tax and GST. I think the same topic I would have handled 2 times at least in last 45 days. So this has got a lot of significance in the upcoming year to set the right tone for the upcoming year and also to end your financial year 2024-25 on a very good note. So as you all very well know, under income tax and also under GST, there are a lot of compliances. And these period of compliances, the due date has been put across in a staggered manner. It is not that you have a compliance in a periodical manner, and it might be it might be a monthly compliance, it might be a quarterly compliance, a half yearly one, or an yearly one. And you can also see that certain compliances like filing of ITC 04, those kind of compliances which were previously filed on a quarterly basis has been now converted to a half yearly or annual return based on your aggregate total turnover. So like this, there is a paradigm shift across the tax domain, and the compliances has also increased on a very high scale. So without providing more context to the topic, we'll right away get on with the topic. I think I have around 30 slides in today's presentation, so I'll have to go a bit faster. We'll definitely have a Q&A session at the end of our webinar, and you can very well raise your questions, and I will definitely make it sure that each of your questions are answered. So first one, these are for the people who still love the old regime. I'm not sure how many of you would still be choosing the old regime over new regime. The charm for old regime of income tax has been lost few years back itself. With the advent of new regime under section 115 BAC, most of the people, either salaried class or the business class, maybe there was a bit of hesitation among the business segment of taxpayers to choose the old new regime by shifting from the old regime at the point of introduction. This was because of the 5-year lock-in period which was there previously. But post budget 2025, which was announced by our Honorable Finance Minister on 1st of February 2025, I think in the 2025-26 financial year, most of the taxpayers would be happily opting for new tax regime and not the old one. But still the deadlines are intact. If you are choosing the old regime of income tax, then you will be eligible to claim deductions under section 80C, 80D, and so on and so forth. There are various deductions that you can claim. So for claiming these deductions, you have to make the payments within 31st of March 2025. So if you make the payment within 31st of March 2025, for the financial year 2024-25, you will be eligible to claim such deductions. Advance tax. You might be surprised because the due date to make payment of advance tax is on 15th of March. Has this slide been added by mistake? No, I'm very sure that it is not a mistake. So why I have added this slide? See, if you miss your payment of advance tax, 2 kinds of interest liability gets triggered. One is the interest under section 234B, and another one is the interest under section 234C. One interest, the 234B deals with the shortage in payment of advance tax to the extent of 90%. And 234C deals with the payment of advance tax based on each quarter, whether you have complied with the quarterly payment of advance tax. So these two are different sections, and the interest will be calculated based on these two parameters. So if you can see the slide, first in the first quarter you are supposed to deposit 15% of the total advance tax liability, then 45, 75, and at last 100. What if you have failed to deposit the advance tax within 15th of March? So one situation is that 234C would apply. And if you are still not making the payment within 31st of March 2025, then 234B would also come into picture. So plan your activities, plan your payment of advance tax if you have not made the payment yet, and definitely get yourself immune from applicability of 234B interest. So if you are yet to calculate your advance tax, definitely have a look at your AIS portal in your income tax website. So in the AIS portal, all the activities, the statements that are uploaded by your mutual fund, asset management companies, your broker, or the land details, the sale of land, if you have done any transaction, will be uploaded by the registrar office, and the interest that you have earned from your savings account or fixed deposit account, the payments that has been made to you after deducting TDS by your suppliers or the person who is giving you any kind of income. All these transactions are reported in AIS statement. And if you go and see your AIS statement, up to quarter 3, all the transactions would have already been reported over there. So please cross verify once with the AIS statement, then compute your advance tax liability accordingly. See, there are many situations when we do the tax computation for our clients. What happens is that the data will be received somewhere in between June or July. So at that point of time, when we check the transaction, there will be a capital gain transaction, and this might have happened in the second quarter of the financial year. In that case, you are supposed to pay the advance tax liability pertaining to this capital gain income in that quarter itself, but you might have skipped it. So reviewing it at least now will reduce the interest liability and definitely make sure that this 234B and 234C interest will be at minimum. Next comes TDS review. This section is mainly for the business taxpayers who earn their income from business or profession. So see, your accounting team who is doing the transactions, they will be well versed with the recurring transactions. That is what we could see from our practical experience. So in most of the cases, if the TDS payment for a particular transaction is coming every month, if it is of a recurring nature, in that case, in most of the cases, the TDS is correctly deducted and paid. Whereas if there is a transaction which is non-recurring, which might be a one-off transaction, such as a payment to an advocate, payment to an architect fee, advertisement expenses, which is not a recurring nature, which you are not doing it on a monthly basis, all such transactions, there is a possibility you might have overlooked the applicability of TDS. So in that case, what you do, you have to in a consolidated manner, take your profit and loss account, then you run through your expenses and check whether there are any transactions which are of non-recurring nature and on which you have missed to deduct TDS. You have to also keep in mind about the respective section and also the threshold limit before ascertaining your TDS liability. There are also certain transactions for which TDS rates got changed mid of the year. So from 1st October 2024, if you are making payment of commission, the TDS deduction is not at 5%, it is at 2%. So up to October 1st, if you are making payment of commission, you are liable to deduct TDS at the rate of 5%, and post October 1st, 2024, you have to deduct it at the rate of 2%. So there are these kind of changes also. If you have some unutilized challans, which is pertaining to some previous years, if there are some challans of that nature, then you can very well use those challans and pay the liability for current period. You can plan to make the payment for the period of March 2025. So that is also possible. Then there are also possibilities where you might have missed to issue Form 16A to your customers. There is also a possibility that you might not have got the Form 16A. So in those cases, kindly send a mail to your suppliers and also your customers, and for whom you are deducting TDS, you are supposed to issue the Form 16A. Then you have to issue it to them. There is also specific due dates for issuing Form 16A under TDS provisions. And also do one thing, please do one thing. When we were going through the transactions or the traces portal of many of our clients, we came to notice that for many clients, for at least few of the clients, there were some outstanding demands that were pertaining to previous years. So in a single dashboard, you can see the list of financial years and the amount of demand which is pertaining to that year for your clients from traces portal. So let this be a month where you review the TDS defaults for previous years and correct it. So there is no other point apart from this. Then you are inviting a notice. If a notice is coming from your income tax department, then you are forced to respond to that, identify the mistake, keep other tasks aside and complete it. So before that, you do a self-assessment, you take a look at the outstanding liabilities that are pending to be paid in your portal. Then if there are any correction to be made, you can do it now. You can file revised return. And if there are any unconsumed challans which is pertaining to previous years, then please use it for making payment and close it. Do not keep that amount there. That number will be there unless you receive a notice and then you will have to face all the penalty and other proceedings. Please do not stretch it to that level. Try to get it rectified now itself. So these are some of the points related to review of TDS transactions during the year. As I was sharing with you, there were changes in TDS rates mid-year. So these are few sections. In this 194H was one of the section which is directly correlated to, which will directly be relatable to most of the business owners or most of the persons who are attending the webinar now. So that is why I just mentioned about that section. Then what are the other changes in TDS rates? See, there are certain changes which I have given in this table consequent to the Union Budget 2025, which are proposed in the finance bill. So these changes you can refer later. I'm not going in deep explaining each one of these. There are some increased limit in these thresholds. Threshold for applicability of TDS, the limits has been increased. If you can see here, I have highlighted the rent transaction and also the LRS transaction when you remit the payment abroad to some other country. So these kind of transactions, there is a substantial increase in the limit for checking the applicability of TDS. Now there is one thing that will start kicking in from 1st of April 2025. So this is the TDS on remuneration to partners in partnership firm under section 194T. So the threshold is 20,000 rupees, which is a very meager amount. I am not sure in how many partnership firms the remuneration paid to partner would be less than 20,000 rupees. If it is a namesake firm, then that is a different matter. Or if it is a firm which is going through a tough time now, that is a different matter. But otherwise, it will definitely be more than 20,000. And please plan to make the payment of TDS from April itself. If you have a habit of planning your budget beforehand itself, and also the TDS payment also, if you are making a budget, then please include 194T also and make the payment without fail. This is not for 31/3/2025, but this is for the prospective transaction which you will be handling from 1st of April 2025. Then you have a change which is proposed in the union budget. So this change, you might have come across various situations where the TDS return filed by you has been processed with defaults. So many a times I have noticed that the common reason for such default is inoperative PAN. What does this inoperative PAN mean? See, if you are a person who is having TDS credit of more than 50,000 rupees in a previous financial year, and you have not filed your income tax return for that particular year, then your PAN would be flagged as a specified person. And then based on this identification by the income tax department, your PAN number would be added to a specified person list, and then it is deemed as inoperative. And also there are situations where your Aadhaar number is not linked with your PAN number. In that case also, there is a possibility that your PAN number might turn inoperative. So under this situation, the person who's deducting TDS was having a very tough time, because they really literally did not have that much facility to know whether this person's PAN or PAN is inoperative or not. There are also various issues with the person for whom the payment is being made. He will come and say that, see, I have given you the PAN number. You cannot deduct more than 2% or 5% as per the respective section. How can you deduct 20%? Like this, there are many issues that came up in many of the companies and also many of the persons who are deducting TDS. So later on, even I think income tax department also realized this is not the right way to do the compliance, and they have done away with this specific requirement. And this higher rate of TDS deduction is not applicable prospectively from 2025-26. Next point, this is with respect to getting the balances, correct balances from your creditors. Why specifically from creditors? The debtors we'll see in the upcoming slides. So creditors, you might have come across the notice sent by income tax department. Here I have just attached a screenshot. This is a notice which calls for information which is issued under section 133 subsection 6. This has called upon information regarding the transactions with your customer. So if this information, this notice is being sent to your creditor, your supplier. So you are the customer to your supplier. So if this notice is being sent to your supplier, then definitely he will be liable to furnish this information to income tax department. In that case, if your balance, the balance of that particular supplier, which is reported in your financial statement, is not matching with the balance which he is showing in his books of accounts, then there is a problem. Income tax department might take a stand that the balance reported by that person is correct, and the balance which is shown in your books of accounts is incorrect. And if it is more than that of the balance which is in the books of accounts of your supplier, then the difference amount might be treated as an income in your hands. Under this situation, your supplier has to mandatorily provide information to income tax department. This might happen at any point of time. It is not necessary that it will happen in June or March or any other month. There is no certainty as to the periodicity or the month in which this information would be sought from your supplier. So you have to ensure while reporting the closing balance, get this account statement from your suppliers. If there are any debit or credit notes which has to be passed, kindly make the adjustment payments and ensure that the balance in your supplier's books of accounts and also in your books of accounts is in agreement, so that in a later stage, even if there is a scrutiny from income tax department, we will be able to substantiate our balances based on such details. Coming to 43B transaction. See, under Income Tax Act, there are certain transactions or certain expenses which are allowable as expenditure only if you have made the payment. See, under Income Tax Act, it is not such that you have creditors, something called as creditors in your balance sheet. This figure represents the bills that are yet to be paid. But still you will be eligible to claim the expenditure for arriving at the taxable income and then compute the tax liability thereon and discharge the payment. But under this section, section 43B, they have listed specific transactions. For these transactions, if you have to claim it as an expenditure for the respective year, for financial year 2024-25, if you have to claim the expenditure, such expenditure, for example, commission, which is payable to employees, bonus or commission, which is payable to employees, if you have to claim as deduction in the financial year 24-25 itself, then you will have to make the payment and then only you will be eligible to claim. When you have to make the payment, you can make it within the due date of filing return of income that is available. You need not make it within the 31st of March 2025. That is not required. But there is an exception. We'll come to that exception in next slide. So generally, 43B payments, it has listed out certain payments like the tax payments, EPF contributions, interest payable to public financial institutions, and so on and so forth. So for all these payments, you have to pay, make the payment for this payable amount within the due date of filing return of income. What about the last one? Clause H of 43B. This clause talks about the payment to micro and small enterprises. Please be mindful here. It is not micro, small and medium enterprises, which they are called as the MSME enterprises. It is only micro and small enterprises. So what is special with this entry? See, to claim the deduction for payment relating to outstanding dues payable to micro and small enterprises, you can claim it only if you make the payment within 31st of March 2025. You cannot stretch it to the due date of filing return of income. If you have a due that is payable to micro or small enterprises, eligible micro or small enterprises on eligible invoices, and the due date falls within 31st of March 2025, and then you are making the payment only in the month of April, then you will not be able to claim the deduction for financial year 2024-25. You will be eligible only in the year 2025-26 to claim such deduction. That is the difference between 43BH and other clauses under section 43B. We will see this along with an example in upcoming slide. So this is the payment which is made to micro or small enterprises under section 43B clause H. So under this clause, the due date which is specified is either 15 days or 45 days. 15 days is by default. 45 days is if you have an agreement with your micro or small enterprise service or goods manufacturer. So with that, with your supplier, if you have an agreement, then you can stretch it up to 45 days. Even if you have an agreement and you are going to mention the number of days of credit period as 60 days, it is not valid. The maximum number of days which you can mention as given under the MSMED Act is only 45 days. So by default, it is 15 days, or if you have an agreement in that scenario, it is 45 days. Whether the supplier should mandatorily get registered under MSMED Act to claim the protection under 43BH. So this point is explained from the standpoint of supplier. The supplier who would be expecting payment from his customer. So within 45 or 15 days to claim this benefit, whether you have to get registered under MSMED Act, that is the question. So yes, you should get yourself registered under the MSMED Act and the Udyam registration that you would be very much aware of. And it is also a very good practice to mention this number in your invoices. See, there are certain situations where your customer might not be aware the status of your enterprise, whether it is a micro, small or medium enterprise, whether it is registered at all. So these things your customer might not be aware of. So for that, as an additional field, you can include this aspect in your invoice. And if you declare it in your invoice, it is considered that you have intimated your status of micro or small enterprise to your customer. And later on, if your customer is disputing on this aspect, whether they are saying that I did not know whether indicated this. This is something similar to the LCM liability invoice that is issued by a goods transport agency to customers. In the invoices issued, they will mark as tax paid under reverse charge mechanism. And also you might have come across this aspect when you have received an invoice from an advocate. They will also send you an invoice under which it will be mentioned that the tax is to be paid by the recipient under reverse charge mechanism. So such declaration in your invoice will ensure that your status as a micro or small enterprise is properly communicated to your customer, and they will be binding to make you payment within the stipulated period of 15 or 45 days as the case may be. Now next comes another question. Whether service providers also fall within the ambit of micro or small enterprises? The answer is yes. Definitely, the service providers are also falling under this category, and they can also avail the benefit of a early payment from their customers. The traders are also covered under this definition. See, traders can also obtain Udyam registration. They can also get registered under MSMED Act as a micro, small or medium enterprise. There is nothing that stops them from getting registered under Udyam portal. But whether 43BH is applicable to them or not, that is the crux of the question. So in this office memorandum, you can see that for the purpose of MSMED Act, the traders are included only for priority lending. So apart from priority lending, traders, the definition under MSMED Act cannot be stretched for traders. So considering this point, you can say that if you are making a purchase from a trader, in that case, 43BH compliance will not be applicable to that particular invoice. So these are all the points which we have already discussed. So this is the illustration that I was talking about. So here, let us assume the date of invoice is on 1st of March 2025. And the date of delivery of goods or services is also on the same date. Say it is a 15-day time period, the default number of days we will consider here. So 16th of March is the due date for making payment. You as a customer has made the payment on 25th of March 2025. Whether deduction is available in this year itself? The answer is yes. You can claim deduction in financial year 2024-25 itself in this situation, because even if you have even though you have missed the due date for making payment, you have made the payment within the financial year. So for this reason, you can note that the deduction is available in the financial year 24-25. In the next example, the same date, the date of invoice is the same, date of delivery of goods or service is also the same, due date is also same, but the payment date is on 3rd of April 2025. So what happens here? You are making payment only after the due date and also after the financial year. So in this situation, you will be eligible to claim deduction only in the year of 2025-26 and not in 2024-25. You have to be mindful of this. So many invoices which you are accounting from 1st of March or especially from 15th of March onwards, you have to be mindful because the due date might fall any day on any day from 1st of April to 15th April. So you have to make the payment so as to claim deduction. If the purchase value is also higher, then you will have to definitely consider this aspect, because if you look at the P&L after March month, this invoice will also be considered as a deduction, and you will be calculating the profit and also planning to make the payment of income tax, and you will be assuming that this is the payment that is going to come. But you might be taken for surprise at the time of filing return of income. If your accounts is also subjected to audit, then your auditor has to specifically mention about the status of disallowances based on these sections. So 43B disallowance should separately be reported in your tax audit report. At that point of time, there will be no option available for you to claim deduction in that particular year itself. So it will be a very big hardship for you. Kindly note this aspect and also review all the pending bills for which payment has not been made up to date. Prepare an invoice-wise statement and a tracker. Ensure that the payments for micro and small enterprises invoices have been made within the stipulated date and claim deduction during 24-25 itself. Now there is a small intricacy in this 15 or 45 days. So there are two terminologies which has been mentioned. One is day of acceptance and another one is day of deemed acceptance. What if there is a situation where you have supplied goods and your customer has raised some concern about the quality of goods? See, in this situation, if your customer has raised such concern within 15 days of receipt of invoice or delivery within 15 days from delivery of goods, in that case, the stipulated day of this 15-day time period will get paused. So from the date of raising the issue up to the date of making good, that you have to make good of the issue, you have to resolve the issue that has been raised by your customer, and then from that date you have to again resume your cost that you had fixed on the date of raising this concern. So the days between these two aspects, the date on which your customer has raised the issue and the date on which you have resolved the issue, the difference days, the number of days has to be excluded for computing the due date of payment. So you can be mindful of this also. If there are such situations where you are not sure about the quality, then kindly give a note, kindly send an email, formal email, communicating the deficiency, communicating your quality issues, whatever problem you have, mention the invoice number, value, and all the aspects, and communicate through the official channel itself. A written communication may also be resorted to, or you can also send an email across. So this will serve the purpose of raising the issue. But you have to do this within 15 days of receipts of goods or service. So also be mindful of this aspect. Next point is with respect to inventory. See, while doing internal audit and while visiting our clients at various instances, we have noted that the total inventory value that is in the balance sheet does not consist of only live inventories or moving inventories. At various instances, there are also many stock items which have been piled up due to quality issues, which might be waste stocks, which is a non-moving stock. So for all these reasons, your inventory value, which is shown at the balance sheet date, might get inflated. There is also a possibility, if you are already having good amount of profit in this year that is booked in your P&L account, then in these aspects, if you be mindful, then you can create some allowances for these shortages or losses or reduction in value of inventory. You can create some allowances and reduce your profit to that extent. For this, you have to do an item-wise verification or physical verification of your inventory, and also assess the net realizable value of your inventory. The net realizable value, if it is lesser than your cost, then obviously you have to restate it to your net realizable value in accordance with the accounting standards, and also to reduce the profit to that extent. So this is also a very crucial aspect. I'm sure that most of you who are dealing with goods would be planning to take a physical verification of inventory on 31st of March 2025. So kindly be mindful of this allowance also, and you can proceed accordingly. Another aspect is that during January, February, or March, there are possibilities. If you are a manufacturing concern, you might have purchased some machinery and the erection has not been completed. There is a possibility that this situation might come. So if it is not completed up to 31st of March 2025, then you have to take it through capital work in progress route, and you cannot capitalize it and add to your fixed asset and then claim depreciation. It is not possible. See, even if it is a 6 months depreciation, it might help you to reduce your income tax liability to that extent. You may have considered this aspect and also have calculated the advance tax beforehand itself, by thinking that this machinery would form part of your closing WDV and you will be able to claim the depreciation at least for 6 months in this year itself. But if you have not put to use the such fixed asset, then you will not be eligible to claim that depreciation in the current year. So kindly review your capital work in progress ledgers, and if there are any assets which is nearing completion, please make sure that it is converted to fixed asset and the operations is commenced, so that it achieves the put to use status and you are also eligible to claim the depreciation in this particular year itself. Credits in capital account. There are various instances where in a partnership firm, for bringing in additional funds to the company, to the business, the partners might be availing loans in their own name, in their individual capacity, like a gold loan or personal loan or some other business loan. For whatever reasons, they might be taking the loan in their individual capacity. So in this situation, what happens is that such loan amount would be credited to their savings account directly. And from that savings account, it would be then transferred to the partnership's bank account. So here you can see that the credit is directly from your partner, and for this particular transaction, the source of the partner should also be documented. On a later stage, this credit to the capital account more than the profit earned during the current year might be scrutinized by the department. And if they are asking for a clarification as to why and what is the source of such credit, if you are not in a position to explain it, then section 115 BBE might kick in, and your that amount of capital credit for which you are unable to explain the source might get taxed at 60%, 70, more than 70% as effective rate. So please be mindful of this aspect. Keep a track of the credits to your capital account from your partners, and list out the sources from which these funds have been obtained, whether it is from loan, whether it is from a deposit that they were holding, whether it is from a sale of asset that your partner was holding, and if it is from the sale of asset, whether such sale transaction has been subjected to tax in the hands of his partner. All these things, please be mindful, because on a later stage, at the time of scrutiny, it will be very difficult to keep it as an unexplained income. And if you do not have a valid explanation, then it will be taxed at more than 70% rate of tax. Unsecured borrowings. So similar to loan, obtaining loan from a financial institution, there are situations where you might have to get a loan from your near and dear ones, your friends, your other business partners, person who know, there might be networking partners also. So these loans that you obtain from these people, please make sure whether they have the capacity to lend such amount. So if you are taking a case of a person who is your friend, and that friend is earning an income of 5 lakh rupees per year for past 3 years. In this situation, that friend has given you 30 lakh rupees. I'm just giving an illustration. So there is a disparity between the earning capacity of your friend and the amount that is lent to you by your friend. So the department can very well scrutinize the earning capacity of the person who has lent you money. So that is possible. In this situation, please be mindful from whoever you are availing loan or funds, whether they have the capacity to lend such amount. Capacity doesn't mean that whether they will be able to give you or not. See, they might be able to give you on paper, whether they have shown the level of income, that kind of income in their return of income across the previous years. So whether they have legitimate capacity to lend you such amount, that will be the question. And also you might have to have some details like PAN, Aadhaar card. Also, you might have to report it to the income tax department. So please be mindful of this aspect also. Within March 31st itself, you can obtain these details, so that later on at the time of filing return of income, for this reason, it need not get delayed. Coming on to compliances under GST Act. First one is Rule 86B compliance. What does Rule 86B say? See, if you are having a taxable turnover of more than 50 lakhs per month, then you cannot utilize ITC to discharge 100% of your tax liability. At least 1% of the total tax liability for a financial year on a cumulative basis should have been discharged through cash and not by input tax credit. This rule has been put to place to curb the practices of certain traders who engage in bill trading practices. So the department is very keen on this aspect. You have to be mindful whether you please check up to the period of February 2025. If you are having a taxable value, if you are doing a turnover of upwards of 50 lakhs per month, you compute the total tax payable and total tax paid in cash and total tax paid by utilizing ITC. If total tax paid in cash is not at least 1%, then please make a payment in DRC03 in this month. Or you can also consider March month's turnover and cumulatively make the payment to make it good as to 1%, so that your total 1% of your total tax liability is paid in cash. So make sure that this rule is complied with. And there is also an exception under this rule. If the key managerial person, if you are a proprietorship, then the proprietor himself or herself, then the managing director or partner, if they have paid an income tax of more than 1 lakh rupees in the previous financial year, then Rule 86B is not applicable to you. Then if you have claimed a refund of more than 1%, 1 lakh during the previous financial year, it means that your accounts has been properly scrutinized and the income that you are declaring is the correct income. That is how the department sees. So this section is this rule is framed in this manner. So if more than 1 lakh of refund is availed by you in the previous financial year, then you might not look into 86B compliance. If not, then you have to cumulatively check how much is the value and then make the payment accordingly. This is a small illustration. So in this illustration, you can see that up to February 2025, the total tax liability comes around 1 crore 98 lakhs. Total cash payment made up to February is to 50,000 rupees. So up to February, if you see the Rule 86B compliance, the total liability comes around 1,98,000 rupees. If you add the liability of March 2025, then it comes around 2,16,000. And in the month of March 2025, you have to deposit 1,66,000 to make sure that you meet the 1% tax liability discharge in cash, that is 2,16,000 rupees. This is how you have to ensure this compliance. Next, coming on to ISD registration. You might have come across the necessity of ISD registration and this becoming mandatory from 1st of April 2025. The GST registered taxpayers who are having presence in multiple states, they have to mandatorily get registered under ISD. What is this concept? See, there are situations where you have a head office or your corporate office is situated in Tamil Nadu. You have branch offices in Maharashtra, Karnataka, Telangana, across different states of the country. In this situation, certain services would be received at the corporate office level, but the benefit of these services would be availed by all the branch offices. For example, it is a business consultancy service. So the business consultancy service will not be focused at the state specific level. It is for the overall business. So considering this, on this invoice, it is not fair for you to claim the total ITC in the Tamil Nadu registration itself. In this case, you have to obtain an ISD registration in the state of Tamil Nadu, and your business consultant, the supplier of service, you have to tell them to issue the invoice in ISD registration. And after obtaining the invoice in your ISD registration, then you have to transfer the input tax credit pertaining to that invoice to all the other states based on a prefixed parameter. It might be the aggregate total turnover which has been affected by these registrations in the previous year. That can be a yardstick. So you have to obtain this invoice then through your ISD registration and then transfer the input tax credit to other registrations. This is how you have to do it. So you might have a doubt here. See, if the supplier is also from the state of Tamil Nadu, he will be giving an invoice in CGST and SGST. What will happen to this? So through ISD, if you are receiving an invoice of CGST and SGST, you will be transferring it to other states as IGST. So there will not be any confusion. And in the vice versa situation, if you are receiving an invoice which has mentioned IGST as tax liability, then the ISD registration will take it as an input and distribute it as IGST itself. So there will not be any issue as such in this manner of distribution of credit. So if you have multiple registration, please ensure that you have obtained ISD registration in this month itself. Next requirement is with respect to the GTA. The GTA can opt to pay tax under forward charge mechanism at 12% rate by taking input tax credit, or at 5% tax without taking input tax credit, or also another option where the tax liability will be discharged by the recipient of service under reverse charge mechanism. So there are three possibilities for the GTA. So the GTA has to file Annexure 5 within 31st of March 2025 by declaring their option either to go under the 12% FCM mechanism or 5% FCM mechanism, or to pay, or the recipient should pay tax under reverse charge mechanism by filing Annexure 6. So this activity has to be completed within 31st March of 2025. If you are a GTA, kindly ensure that this compliance is met with. Next compliance is for the restaurant or hotel industry. They can opt for paying 18% of GST by declaring their premises as a specified premises within 31st of March 2025. They also have an option to make 5% of GST without ITC. In the case of 18% of GST, you will be eligible to claim the input tax credit. While if you are choosing 5% of GST, you will not be eligible to claim input tax credit. You have also to file Annexure 9 before 31st of March 2025 by choosing the option. For a specific person, this option is not available. The person who is having the units in their premises where 7,500 rupees or more is charged for for a particular unit of stay. In that case, you have to mandatorily follow the 18% route. You do not have an option to take the 5% route. So this is with respect to restaurants or hotel, and please file the respective annexures and ensure compliance within 31st of March 2025. Another one is the GST amnesty scheme. I'm pretty sure that you would have got a call from the GST department itself. So the department official has been making calls right, left and center to all the tax payers, and they have been pestering them to make the payment of tax liability and get the relief of interest or penalty. They are not very much keen about whether the tax liability is to be paid on merits. They are not asking much about it. They are only keen of making payment of tax. And if at all there is also a situation where the liability has to be paid, and then it is very much beneficial for you to make such payment and avail the scheme under 128A and file the SPL forms to get waiver of interest and penalty. There can also be such a situation. So for this, what you have to do, you have to make the payment of tax that is mentioned in the demand order or the appeal order within 31st of March 2025. The payment of tax amount should be made in full. Part payment is not possible. It should be made in full within 31st of March 2025. And then you have to file these SPL forms also. These forms has to be filed within 30th of June 2025. So filing the forms is within 30th June 2025. Making the payment is within 31st of March 2025. So this is pertaining to financial years 2017-18 to 19-20, and the show cause notice or order issued should be in the section 73. If you have already received an order under section 74 and you have applied for a rectification and converted it into an order under 73, that is also eligible under this scheme, and make the payment of tax within 31st March and avail this benefit. Then waiver of GSTR 9C late fee. For the financial year 2017-18 up to financial year 2022-23, there are situations where you have filed the GSTR 9 return, for which the late fee is calculated at the time of filing GSTR 9 itself. There is no way of escaping. You might have already paid the late fee for GSTR 9, but 9C you can file it even without making the payment of late fee in the portal. So there was a confusion. One side, there was an argument that GSTR 9C is not at all a return. It is only a reconciliation statement. So there were arguments like this from the legal experts, and there are many cases that went up to High Court. So the GST department, the council has come up with a solution, and they have said that they have told that if you file GSTR 9C, pending GSTR 9C, right from 17-18 up to 2023 within 31st of March 2025, then the late fee would be waived off. So it means that late fee is also applicable for GSTR 9C, even if it is not auto-calculated in the portal. So if you have not filed your 9C and your turnover is in upward of 5 crore rupees in any of the previous financial year, kindly make sure that you file your GSTR 9C within 31st of March to avail the benefit of late fee waiver. And if you have already made the payment of late fee, there is no refund available to you, unfortunately. So there are certain other aspects which I will just run through. For the financial year 2025-26, please make sure if you have clocked the turnover of more than 5 crore in 2024-25, so that e-invoice applicability might kick in from 1st of April 2025 itself, and also 6-digit HSN code need to be mentioned. So these are documentation issues. It has to be complied with. If you are not generating any e-invoice, then you are inviting the roving squad who are standing in, on the road and checking your documentation, and they will levy a penalty of 200% of your tax payable in that particular transaction. And it is very difficult to deal with such situation. Please ensure if you are already not enabled for e-invoice and your turnover has crossed 5 crore in the current year, especially in the month of March, you might have crossed the turnover, then please make sure from 1st of April 2025, you are generating e-invoice. Then the delayed reporting of invoice, which were permissible by the GST portal for taxpayers having turnover up to 100 crore, there were no stipulated time period which was mentioned previously, but now it has been reduced to 10 crore. And if your turnover is more than 10 crore and you have an invoice for which e-invoice is not generated, then you will have to generate it within 30 days from the invoice date. Later that you will not be able to generate e-invoice for such transaction. The next one is the compliance with section 16, where you will have to make your payment to the supplier within 180 days. If not, you will have to reverse the input tax credit proportionately and then re-avail it when you make the payment on actual basis. Another one is related to transaction, which is non-recurring transaction. It is sale of fixed asset, and if fixed asset happen to be a car, then you also have the benefit of margin scheme which you can apply. So kindly review the transaction, and if you have sale of car on which you have missed to pay GST, or if you are yet to pay GST, then consider the margin scheme also, in which you can compare the WDV and the sale value of asset, and if you are making a margin, a profit in this transaction, then only you will need to pay GST on such transaction. Then filing ITC 04 for H2, the due date will be 25th of April 2025. Kindly ensure all the transactions are perfectly captured, and also the previous period transaction, all the delivery challans, you have marked the inward receipt of goods. If the goods are inputs, then within 1 year it has received, you make sure. And also if it is capital goods, within the 3 years of outward movement of such capital goods, it should be brought back into the system. So the next point is with respect to RCM on rent paid for immovable properties. So this is a change which also came in from the October 2024. So if you have missed to make payment of RCM for rent payment to unregistered person, then you can pay it along with the other payment in the March return and claim input tax credit. If you delay it, then you will have to pay it along with interest. Kindly make sure that these compliances are met with. And at last, letter of undertaking. Letter of undertaking, if you are dealing with export transaction and you are making the export transaction without payment of tax, or you propose to make such transaction in the subsequent financial year, then you will have to file the letter of undertaking in RFD 11 form in online through GST portal. If you do not do this, then you are not eligible to make supplies, that is export, without payment of GST. It will be deemed that tax has to be paid in such transaction if you are not having a valid LUT. Also make sure that that LUT number is mentioned in your invoice as a good practice. For SEZ supply also the same can be followed. So these are the transactions, or these are the complaints which I had to I plan to share with you. As I told you earlier, I think I have exceeded my time limit. I had pretty large number of transactions lined up, so I had taken a bit more time to complete it. Thank you so much for your patient listening, and I will take up questions if you have any. Sir, PPT will be shared to you, sir. Mail ID. If you have registered through the Zoho, that registration page, yeah, definitely PPT would be shared to you, sir. Please don't worry. Good evening, Ramnathan, sir. In case there is LDC related to related default, so you mean to say that there is a lower deduction certificate that is obtained, and there is a default pertaining to that. The certificate is related to specific person and not constrained to the amount mentioned in the certificate. So for lower deduction certificate also, if you are talking about the inoperative PAN, the same thing is applicable, sir. From the subsequent financial year, it is done away with. Please don't worry about it then. Bhuvaneshwaran, sir. So for this, we have received notice for TDS short deduction due to PAN Aadhaar not linked. Yes, sir. That is what I. This is the same topic which I spoke about. But for the current financial year, it is applicable, sir. Either you will have to get that amount back from your supplier, or then it is very difficult, because the due date is already over. To link the PAN and Aadhaar, you were mandated to do it before 31st of May 2024 itself, if I am not wrong. So at that point of time itself, you should have done that. If it is not done until now, and you by mistake you have also made the payment to your supplier, then there is really no option available. You have to negotiate with the supplier and then get this thing corrected. If you are having a continuing business terms, I think this should not be a problem. In the next year, you will be able to get it back, sir. Yes, sir. I understand that you have received a notice for short deduction for 23-24. Sir, as I told you earlier, you make sure that the person who is having inoperative PAN has corrected his status. And if he has filed the return, take that and make an application to the concerned TDS officer, sir. You can approach them in person and then try to get it resolved. That might be a practical step which I can suggest, because in few of our cases we did that, and in some cases we were able to close it in that way, sir. Liability created for variation between 1 and 3 weeks. Sir, if the order is passed under Mahesh, sir, if the order is passed under section 73, then we can very well go ahead, sir. For hotels and restaurants, the client has not specified promises. Sir, if it is Prabharan, sir, if it is not under the category of a specified premises, if your client's business does not have a specified premises, then it is not mandatory, sir. It is optional. Invoice generation. Ram Rao, sir. Yes, sir. You have to check the turnover from financial year 2017-18 to financial year 2024-25, sir, and not the previous year turnover alone. From the initial year itself, you have to check that. threshold limit. But if it was the if in case you crossed the turnover in any of the previous year, then e-invoice might have been applicable to you even before this year itself. Then that confusion should not come here, sir. Nadraj sir is asking about the professional services from unregistered person. Sir, there is no RCM as such for professional services from unregistered person. If it is falling under the category, any of the category mentioned in notification 13/2017, then only RCM is applicable. From an unregistered person on plain reading, it is not applicable. Venkatesh sir, yes sir, PPT will be shared to you. Thank you so much, sir, for participating, for attending our webinar. Shankar Narayan sir, yes sir, thank you so much, sir. For 1% ITC, we need to pay cash, can be adjusted cash balance. Sir, you can adjust it against the cash balance available. Ajay Kumar sir, you have asked the right question, and I also wanted to mention another point. See, many people have a doubt whether there are certain transactions for which TDS is deducted by the governmental authority or PSU or other authorities, and that would come into our cash ledger. This is not the direct cash payment that is made by us into the portal, but this is also considered as cash payment only. The TDS credit that we are having in our cash ledger, it is also considered as making cash payment. So you can very well use the existing cash balance in your cash ledger to make sure that 1% payment as per rule 86B is complied with. Chandra sir, yes, thank you sir. What about lapsed transaction in earlier months or excess declared? Sir, I am not sure about what transaction you are talking about, sir. If you can be more specific, then it will be easier for me to reply, sir. Partners interest on capital, TDS is applicable. TDS is applicable to payment made to the partners, sir. 194T. It is applicable for all the payment made to the partners, sir. Yes, it is applicable. What if we are not disallowing MSME-related payments? Rahul sir, at the time of audit by the officer, he might disclaim the opinion. He can very well make a mention that to ascertain whether the taxpayer has made has ensured the proper compliance under section 43BH. The taxpayer has not maintained proper records. That can well be a way out for the auditor just to mention it in the audit report and file it. But later on, if your return is scrutinized by the income tax department, this might not be the situation. That might get added to your income for that particular year, and you will have to pay the tax along with interest, and penalty might also kick in. So that is the consequence, sir. What about the ITC reversal of exempted supply? Should it be done at whole year wise? Sir, you can very well do it, sir. Under Rule 42 or Rule 43, if you are doing any exempted supply, you have to ideally do it on monthly basis if it is for capital goods, because capital goods, if you are reversing, you have to reverse it monthly along with interest. For inputs and input services, if you have unutilized ITC in your credit ledger, then interest might not kick in. If it is not the case, then interest will come. If you are doing exempted turnover on monthly basis, then kindly do it every month. If you are not having exempted turnover throughout the year, then you can do it periodically, either whole year or so. So in this case, I'll just share one example where there are certain spinning mills who are also dealing in windmill generation, power generation through windmill. So here there is a concept called banking concept. I'm not very sure whether it is available in the subsequent year, but up to previous year there was this concept called as banking concept, where the power will be generated, and how much ever excess units that is generated over and above the consumption, that will be sold to the TNEB. So in that case, this turnover is treated as exempted turnover, and this will come only once in a year. So you can reverse the ITC once in a year also, considering the specific nature of your transaction, sir. Please summarize about the transaction to be completed before 31st March. Sir, we will have as a separate discussion. Maybe I will try to include that in next week's webinar, sir. Gerald, sir, thank you for your suggestion. Definitely, I'll consider to include that in our next webinar. In respect of sale of vehicles acquiring before GST and after GST invoicing. Sir, these things also I will deal it separately. So this is not very much specific to our today's webinar. I will deal it separately. I have noted this question. I will definitely deal it separately, sir. Certificate of ITC reversal from our customers for credit note issued more than 5 lakh. Yes, sir, there is a circular. I am not very sure. This 212, I think. So under that circular, if for the credit notes, you can obtain similar to the CA certificate that is mentioned for 2A, 3B difference. You can obtain the certificate from your customers. If the value is more than 5 lakhs, then you have to obtain a CA certificate substantiating the reversal of ITC. If it is less than 5 lakhs, then a self-certified certificate is required to ensure that Section 34 compliance is complied with. Ramesh Kumar, sir, courier and labor bills, which amounts cross to direct TDS. Sir, 30,000 or 1 lakh, as the case may be, sir. The same you have mentioned it rightly here itself, Ramesh Kumar, sir. So that is the threshold limit under 194C, and you have to follow the same threshold only, sir. Rajesh, sir, if an order received for non-filing of 9C and filed appeal rejected. So non-filing of 9C, it is different, sir. Here I was talking only about the late fee for late or delayed filing of 9C. Non-filing of 9C, if the turnover is more than 5 crores, then there is no point disputing. You have to definitely file the 9C and ensure compliance, sir. Invoice only on margin. Shankar Narayan, sir, yes, I think I assume you are talking about the sale of used vehicles. Yes, sir, invoice is only on margin, sir. Can Section 73 demand be paid with ITC credit? Yes, sir, it can be paid. If the tax demand, if the tax can be paid by using balance available in credit ledger. Free samples with the GST instead of ITC was after IM's implementation, customer stop. Sir, if you are sending free samples, it is not mandatory to report in GSTR 1, sir, but you have to proportionately reverse the input tax credit. That is how it works, sir. You need not report it as an outward supply. Architect's fee RCM is applicable. No, sir, not applicable, sir. How can I clear 7-8 tax liability which were received as short deduction? Sir, please reach out to your TDS officer, sir. Unlike the income tax department, they are, I feel they are, helping the assessees to resolve these issues. These are issues from very long time. Like 7 and 8, I think that was the first initial year when e-filing was introduced. And Mahesh, sir, you are asking about the SPL02 filing. The interest is to be paid or not. Sir, interest need not be paid, sir. Only tax liability needs to be paid. You file the application and get the waiver of interest and penalty, sir. Prabharan, sir, while filing 3B, our new client has reported credit note in table 4B2, 4B, B2B in 4A5. As you don't know the concept of reversal and reclaim concept. It's a huge amount accumulated in credit. How to show? Sir, in the subsequent month, you reclaim. The 4B2 means that it is a temporary reversal. You reclaim it through your 4A5, that all other ITC, you report that amount, and then you report it under 4B1 under permanent reversal. Like that, you can exhaust the balance available in your electronic credit reversal and reclaim statement, and it will not get accumulated, sir. TDS under GST purchase of scrap, non-deduction consequences. Same consequence, sir. Disallowance to the extent of 30%. Suresh Kumar, sir. Yes. Fine. I think most of the question has been answered. So thank you so much once again, and hope to see you in another webinar with a separate topic. So have a nice week, everyone. Thank you so much.